Those here in Kukumimle in the crowd, this is Joy News. Welcome to Ghana's leading business analysis program, Beyond the Numbers.
Well, this is the only show dedicated to market development, bringing you updates on deals and key headlines shaping your business day. And Winston, a lot has actually happened over the weekend. And last 2 weeks and last week, we went for a weekend and we saw the war. This is a week after that war, and then we've seen fuel prices go up by more than 30% since that war started. There's also a lot happening in the mining space, especially large-scale mining aspects, where the sliding scale has become one key talking point, and we'll be having a discussion on that. And in fact, a lot is also happening in the market, from the fixed income market, from the equity space. We've got top show for you, very packed, but I want to understand. We heard that, that story published by Reuters about cocoa farmers also saying that they've not been paid, Winston.
These are interesting development. Right now, the commodity sector is a key platform where everyone is investing hugely, looking at what is happening globally, especially from the mining firms' perspective. There's so much prospect coming on. A lot of mining firms are quite viable at the moment because investment is huge. And if you look at their last financials, tells you that indeed they've made so much profit. Some of them have started giving dividends to our investors, and it tells you the potential is huge. South Africa, most of the African nations are also there. But one thing that is quite a key conversation is how much of ownership do most countries have, especially the African countries. Africa is a backrock who will be holding every economy. If you go to US, the lithium, all the components that you need for any manufacturing to feed the industry in China, you need Africa. To feed the industry in Asia, you need Africa. And all this boils down to ownership. But it appears they are doing well, we are rather receiving it. Important conversation we'll be having there, but let's go straight into our top headlines for today, and definitely starting straight from the energy space, where the IMF is warning that escalated tensions in the Middle East could hit growth and spare what they call, inflation, as the global crude prices actually crossed $100 per barrel for the first time since July 2022. The fund says countries should carefully, be aware of how they actually deplete their reserve in the coming days. Indeed, still on the Middle East tensions, Joy News Research is learning that G7 finance ministers will today discuss an emergency oil reserves, a French government source said, in response to surging oil prices resulting from the Middle East conflict. The talks were first reported by the Financial Times, which said the International Energy Agency would join the discussions.
Now, from the corridors of energy, now let's focus on mining, where China and the US and other Western governments have mounted unusual coordinated push to get Ghana to halt gold royalty hike. They say could harm some of the world's biggest miners, according to the report by Reuters. We understand Ghana wants to replace its fixed 5% royalties with a sliding scale between 5% to 12% linked to, bullion prices, part of the effort to capture more revenue from gold's run to successive historic highs. More on big analysis, as we'll be joined by Pakwesi Shandov, who is with the Lands Ministry, Director of Communications.
Absolutely, Kofi. Still on gold matters, Joy News Research is projecting that Ghana's reliance on Dubai for gold export could leave cedi exposed as Iran conflict disrupts trade. Ghana sends more than 72% of its small-scale gold export to Dubai, making the Emirates by far the country's most important destination for the trade.
Western on chocolate matters, Ghana cocoa farmers worry they have not been paid. Deliveries, even after that, a regulator actually said they have relief funds to buy to settle arrears and support the struggling sector. Cocoa Board said last week it had released some 3.62 billion cedis, that's about $336.74 million, to licensed buying companies to clear outstanding payment owed to farmers dating back to November 2025. The disbursement made following a directive from the Finance Ministry was intended to facilitate prompt payment to farmers and improve liquidity in the cocoa sector.
Now, to fix the income market, where Bank of Ghana's latest Treasury bill auction saw the government exceed its target once again, raising 458 million Ghana cedis above the 5.67 million Ghana cedis billion target. That was estimated. Data released by the central bank showed that the total base submitted for the 91-day, 182-day, and 364-day treasury bills reached 10.76 billion Ghana cedis, out of which 6.14 billion Ghana cedis was accepted. The outcome represents an oversubscription rate of 89.53%, exceeding or extending the run of excess demand to 15 weeks and highlighting sustained investor appetite for short-term sovereign securities. Expect more on the Market Watch later.
Definitely more on markets. Well, that's new generation of real estate investment. Trust could open the domestic commercial property market to pension funds and members of the diaspora as regulators and developers seek to deepen the country's capital market and broaden access to long-term investment assets.
Indeed, those are our top headlines for you. We've got Market Watch and big analysis coming up. This is Beyond the Numbers on Joy News.
Definitely a lot to talk about today on Beyond the Numbers. And we have Market Watch for you, where Grace Monaghan of Data Bank Research is joining us to actually test the pulse of the markets. And Winston, a lot is happening in the global space and definitely will have an impact on our markets, right? Where last week we spoke about crude prices, the announcement of government decision to come back to the bonds market. We're expecting that. We're also expecting even the Bank of Ghana's financial to come out later part of this month. Cocoa Board, we also understand, is coming to the market. There's a lot also happening in the gold space, where just before we went for that long weekend, there was that report from Reuters where they quoted that there's Western pressure, the social pressure from China on Ghana to actually halt its sliding scale mineral royalties. We understand a lot of some of these companies in the space are listed. We'll try and see the impact also on them. We have Raymond Anani of Blackstar Capital also joining us. But let's actually start with Grace. And Grace, a lot is happening in the market. We'll come to the impact analysis very soon. But I want you to paint a picture for us. This is actually 1 week and some days after the war. We want to understand how the market has reacted so far. How have we started the trading week? 10 a.m. the market open, hours after. What can you report?
Right. Thank you, Isaac and team. I think the momentum is still the same on the equity market. For the fixed income market, that's the money markets, and predominantly, we still continue to see yields declining. Albeit, the yield, investor participation on auctions are declining. We can see that week on week we are down by 16%, but there's still oversubscription on that front. And it's just a picture of investors telling us that they are no longer interested, or they are reducing their interest in the exposure to the lower yields they are receiving on the markets and turning their attention mostly to the equity market. So we continue to see the equity market thriving. This morning we've seen about 5 gainers already. And even though we have some laggards on the market, we believe investors have started taking some bit of profits away from what they have earned so far.
Talk to us about the gainers, right? Very interesting. Talk to us about the gainers. 5 gainers so far. Who are these gainers?
Yes, we have Access Bank. We also have Ben Soil Palm Plantation. GCB Bank has also made some entrance in gaining. We currently see SCB, Standard Chartered Bank, and then the final counter which has gained today is Enterprise Group Limited. So these are the 5 gainers for the day. The laggards, we are seeing Societe Generale, we are seeing Cal Bank, and finally we are seeing FanMilk also decline.
Just before Winston comes in, you mentioned Societe Generale, and I have a follow-up question on that. Just about 2-3 weeks ago, they published their financials, and they blame heavily the fact that the strengthening of the cedi actually affected their financials. Did investors see this as sort of like a negative signal going into this year, and that's why we are seeing
precisely? But I think what we can say is the counter has made heavy entrance this year, and if you look at most of the counters on the stock market, you've seen a lot of capital appreciation, and I think investors are just dipping into the profits a bit. So we can't entirely blame it on their financial performance.
Grace, I want to understand from you, especially looking at what is happening globally. There's a shift in kind of export, and gold are safe haven for investment. How is the performance of especially mining firms on the stock market?
Yes, mining firms, we've seen Atlantic Lithium. There are currently five listed on the exchange. That's Atlantic Lithium, Tallow. We have Anglo Gold Ashanti, Anglo Gold Ashanti Depository, and then Ashanti Gold. We've seen the likes of that's Atlantic Lithium making heavy entrance. Somewhere last week, we saw that there was some appreciation on the price of the stock on the market. We believe there are still buy interest for these mining names, but just that due to the limited free float of these counters, most of them are unable to trade at the moment. But we believe the momentum will continue for these counters to make heavy entrance.
I want to get from you, Grace. There's this perception which I would like to get an enlightenment for some of our viewers who understand the stock market is just like Malata market, where you can buy tomatoes and at a discounted price anytime you want because it's a quick take. But give our viewers a brief understanding how the stock market operates.
Yes, so the stock market is just like you explained, like Medina market or what have you. But just at this time around, you're not selling the tomatoes, you're not selling the commodities, but what you're selling is part ownership of companies that are listed on the exchange, where you get to make capital gains or you get dividends at the end of the day. So that's just how the stock market operates. Dip your hand into the operations of the companies by taking part ownership of the company listed, and then you stand a chance to get price gains. That's when the stock price increases more than where you bought it, or you get dividend payments where the company decides to give you a portion of their profits at the end of the financial year.
Simple explainer, but I want to get to Anani on the other side of the corridor. And in fact, Grace spoke about the five mining companies who are listed. And the reason why I'm actually focusing on the mining companies is because of the news that we got before we went into that long weekend about that pressure, external pressure on Ghana to halt, royalties. Anani, I want to understand from you, is this having an impact on the stock today, and are the mining companies actually reacting, or are investors reacting to this kind of news we saw on Friday?
Yes, overall, we've not seen any heavy reactions from investors yet. I think this is more like who has the bargaining power, who has the actual chips on the table. At the end of the day, it's going to be this mining firms versus government. Mining companies are a huge part of our budget and our government revenue. Besides the indirect taxes they pay, like the royalties are one other revenue for government, right? So at the end of the day, I think we should always go back to the table and renegotiate. What's the best price? What are some of the global best practices? We as a country cannot lose, right? If the 5% fixed royalty isn't working for us, we have to definitely go back to the table. But I want that to approach it more like a consultative approach, not just somebody forcing or somebody imposing their authority or power on another person. So overall, they are a sector that is very huge. We value the mining sector, but we as a country can also lose.
Remo, talk to me about lithium. And for lithium, I would want you to focus on Atlantic, lithium, because they are actually in our space, but because of the long delay, and we've seen price of lithium actually picking up strongly. How is its shares doing? And since they got listed, have they paid any form of how is it virtually actually doing?
So my firm actually brought Atlantic Lithium onto the market.
I see.
Yes, and so I think since they are listing, there's been some parliamentary or regulatory approvals that had to be done. It's kind of, I do not want to talk more about it. It's kind of like something that is very sensitive, so I would like to not, let me say, comment more on it, but I just want to put out there that overall lithium is a commodity, or it's a product, it's natural occurring product, right? It's something that Ghana can stand to benefit a lot from. We have to approach these things very, very carefully. We want the companies to do well in Ghana, but we don't also want to be, let me say, taken advantage of.
So, Remo, we'd like to speak your mind on how the tensions is reflecting on the stock and possibly the investment in our local market.
Yeah, so I'm sure you are talking about the
Middle East tension, right? Yeah.
Yes. So that's actually very interesting, right? I frame it as a macro coalition. So we're waking up to a completely different geopolitical reality this week, right? We have escalating Brent or oil prices, UK gas, German gas, all those commodity prices are up just in the last 5 days, right? For Ghana specifically, our imported inflation was falling. We're doing well on that front. Last week we printed 3.3% inflation, right? But the issue right now is I think inflation is knocking at the door again. Inflation is something that has to come back to the drawing table. And for investors, you are kind of trapped. So normally in a global crisis, we have capital running to safety instruments like government bonds, right? But here is the case. Government bonds, like we saw last week, 91-day came in at 4.8.
Yeah.
The 364 came in at 9.35. So you are kind of trapped. Where do I put this money? If I put that money in 4.8 today, tomorrow I'm going to wake up and my real with inflation coming back, with the war so escalating, oil prices going up, you're going to wake up with inflation beginning to rise again. You realize that 4.8, the real return is zero. So as an investor, an institutional investor, where do you pivot to? And this is where, let me say, analysts like myself, Grace and Co, this is where we come in as very handy, right? You have to consult an investment advisor. We'll sit down with you, we'll draw the plan. Okay. Equities in general is a space that you can be in, but not all equities. You have to look at these defensive sectors. Yes.
No, so finally, before we go, Grace and then Raymond, final one. I'm looking at the fixed income numbers, the treasury bill numbers, this week. And what I'm seeing is that, rates dropped to about 4.8%. And what you also saw was that you look at the long-term aspect of just the treasury, the 364 days, the interest of about 6%. And because of the interest, you saw a significant rise in terms of the base, offer. That's about 3.6 billion Ghana cedis. Would you say that this is a way of government saying that, well, we are doing away with the short end of the market, 91 days, turnaround period is very short. We are actually now using the 364 days to test how the market is going to react by giving them about 6%. And because of the high interest rate, most of investors are now going into 364, T-bill bills. I want to understand, how is it going to influence government decision to come into the market, and how is our investors would even, react to such, interest rates, this new interest rate adjustments?
Raymond,
so maybe Raymond can take it first. Yeah.
Maybe I'll take that.
Okay, Grace,
okay.
Go ahead, Grace.
Okay, so if you look at the issuance calendar that came in recently, the government rightly stated that they were trying to reduce heavy reliance on the money markets and rather focus on the medium to long-term issuance. I think this is just their move to a bit scale down on the money markets and go a bit medium to longer term for investors to partake in. So maybe it's just a stage just setting right for the expectation of the upcoming issuance. What do we know? We are expecting regardless the rates will favor investors. So whatever can be, I think this is just a step in the right direction for the government.
Raymond, briefly, yeah.
Yes,
talk to us, Raymond. Yeah.
Overall, I agree with what Grace said. Can you guys hear me?
Go ahead, please.
Yes. So overall, yes, I agree with Grace, right? But what I really wanted to highlight in the fixed income market is not where rates are, and it's just the sheer amount of dry powder that is sitting there, right? And I think for issuers, I think this is the time for corporate institutions to actually come to the market. Whatever traditional bottlenecks might have been there, this is your chance to just overpass or go through, pass over all those bottlenecks and come directly to the investors. The investors are not just sitting there and waiting for government paper. They are ready, right? They are ready to invest in very good corporate paper. So whether you are, I don't want to mention this, but like an engineers and planners, or whether you want to raise money for roads construction, whether you want to build schools, whatever it is, I feel like you can bypass all those traditional bottlenecks and come directly to the capital markets.
Great. Raymond, Blackstar Capital, and Grace Monagno of Data Bank Research, thank you very much for those wonderful insights on the market. And Winston, you had a lot there. There's also money in the system in a way, but investors are looking for the right source of investment. And with this uncertainty going on in the global space, you only have to get it right.
I think what the institution regulators need to do is to ensure this advanced risk assessment for the market, considering what we had to endure under the EDP. So the risk assessment should go between a medium to long-term period so that we can understand high risk, high volatile. People can measure. Unlike what happened, the government had to intervene with monies to ensure there's a banking sector cleanup. All these things shouldn't repeat themselves again going forward.
So big analysis is next. You wouldn't want to go anywhere because after this short break, Parkwesi Shandov, Director of Communication of the Lands Ministry, will join us, and Caleb Ziblim will also be with us to analyze that sliding scale royalties that the Lands Ministry wants to introduce as pressure on government. But what is the decision of the Lands Ministry, and what should investors and even the industry look out for? Stay with us. We'll be right back. And of course, it's time for big analysis. And we have a special interview for you, and Parkwesi Shandov, who is the Director of Communication at the Lands Ministry, has joined us. This is an important conversation on that sliding scale that Ghana wants to introduce. And I understand a lot is happening at the ministry.
Absolutely.
We saw the report before we went for that long weekend. And I want to understand, when they say external pressure, what sort of pressure is the ministry facing?
Well, so there are stakeholders that we work with, principally the large-scale mining companies and then the respective embassies here in Ghana. All of them are concerned because effective tomorrow, the bill that was laid in, I think on the 19th of December last year, would effectually mature into law. When that happens, it would have an impact on their operations. And that is why the pressure, if we have to put it that way, is coming from all quarters. But the minister has been very clear that nothing is going to, compel governments to change its stance on the issue. The sliding scale will become effective, and operationally, we'll be seeing its impact, I think, in the second quarter. So effectively, April 2026.
So, Caleb, you heard him. Effective April 2026, the sliding scale will take effect. But I want to understand the countries involved in this whole pressure that we are talking about, and then also, if we are trying to understand the new sliding scale, how much are we looking at in terms of the interest and the motive behind government decisions to even introduce a sliding scale, Caleb?
And well, I think the pushback is not, unsurprising, because majority of the mines in Ghana are not Ghanaian owned.
Absolutely.
Only about 20% of the mines in Ghana are owned by Ghanaians or have some Ghanaian interest. So the 80% of the mines are owned or controlled by the foreign countries. And these are the countries where the other controlling interests are from: Australia, South Africa, China, the US, and China. China is the main player. They control about 32% of total mining in the country. Large-scale mining, not small-scale, large-scale mining. So China has the controlling interest, followed by Ghana with 20%, and then I think South Africa also with 20%. So so China has 32%, Ghana 20%, Canada 20%, South Africa 16%, the US 8%, and Australia 4%. So when you see that these countries are the ones pushing or trying to lobby for the ministers to hold on or try and scale back on the introduction of the sliding scale, it's understandable where they are coming from. Now, we have to understand also why this is happening. Now, last year, the ministry decided to bring legislation to Parliament because, when the Act was amended, the Mining Act was amended in 2015, you're supposed to come with some legislation. That didn't happen for the past more than 8 years. So the mining companies were going with the effective 5%. That was not the royalty rate, but then because that was enforced before the coming of the 2015 amendment, they just went along with the 5%.
Absolutely.
But then that was not the actual royalty rate that was supposed to be in law, because the law says by legislation that come out of
as prescribed
by the minister, and that legislation didn't come about till last year. Now the interesting thing is that we didn't expect gold and the other companies to be part of this legislation, because going into the conversation, it was about lithium.
More of lithium, right?
And remember when they laid the lithium
just for the records, I think it's about 10 years, because Act 900 2015. So it's now that the regulation is coming.
So when the whole conversation came about, we're thinking that it's going to be for lithium, because when the lithium revised list came on, it was 5%. And then it was not 5%, but then that clause that had 10% was taken out and put in with a clause that's prescribed by law, which was 5%, de facto 5%. So now we're expecting that if there was going to be any legislation brought into Parliament, we're going to be for lithium. But then, surprisingly, gold and other minerals were included in there. And when we spoke to some members of the mining community, they said they were not aware that this was going to be laid on the last day of Parliament. So people were scrambling and trying to understand what's happening. And the leap is very high, because from 5%, gold prices are now about $5,000, even though they are dropping a bit. So now all mining companies, effective tomorrow when this is passed, will now be paying 12%. So now that jump from 5% to 12% is what these countries are saying that it's too drastic for us.
Well, we'll come to the impacts, where we are now looking at if the airline becomes, you actually matures, it means that they'll have to migrate from the current 5% to 12%. That would be more than 100% increase in the royalties rate. But Pakus, I want to understand, if you look at the sliding scale that Caleb just showed, what you see is that it is only gold and lithium that have actually within the sliding space. Why is it that other mining companies or other minerals are just 5%, but you're having gold and lithium being between 5 and 12? Is it because prices are very high currently?
Absolutely. And those are high value minerals, if I have to put it that way.
Yeah.
Others like manganese and even bauxite, salt, and all the others, it's a standard 5%. For that one, I mean, even the production is not in huge volumes, I mean, so to speak, compared to gold and lithium. But for these two, I mean, they are more competitive. The prices globally are escalating. That is why the rates is affecting those two.
Now, I want to understand, the mining companies or the chamber actually has concerns. They have concerns about the fact that currently they are already paying a lot in terms of the taxes, and if you combine, they say they're paying more than 60% of what they actually earn. Is that not a good concern to say that, okay, let's hold on and maybe take a relook at what we have sent to Parliament in terms of what we want to do with the current royalties? Because maybe currently you may be driven by revenue, that's a revenue drive, but there are those who have said that take another look at the airline, because the chamber is complaining, and if you do not listen to the chamber, you may have some of your top investors leaving the space like you have in the petroleum space.
Yes, that fear is very legitimate, but if you examine the concerns of the relevant stakeholders, as far as I have diagnosed, I think that they are real.
Where growth begins with a great conversation. Available now on all major platforms.
From my own diagnosis, I think that it is not really about how much they would have to fork out as of now. I think it's really about the fear that it could be replicated in other jurisdictions. I mean, when Ghana does it now, for all other places where they have mining interest in.
It's going to be a snowball impact, right?
Exactly. So I think they are looking at it from that perspective and not necessarily the economic impact it would have on them. Because here in our jurisdiction, if you look at the new regulation, for example, there are other well-decided and heavily discussed incentives that will be extended to them. I will not be able to go, run us through all of them. But if you look at the packages that are going to be extended to them, they are favorable enough, and I may well say that they are good enough to compensate for maybe the high royalties rates that they would be.
I agree with you when you say that, well, the snowball impact could be one big factor or one key reason why the industry or the chamber is actually against this. But let's look at the leap from 5% to 12%, because if this takes effect, gold prices are more than $5,000 per ounce, which means that mining companies would have to pay 12% as royalties. Don't you think that this is too expensive at this moment in time? And not, you may say that, well, they are not looking at the economic impact, but if you sit down to do the actuarial studies, you realize that the economic impact also weighs a lot in terms of this equation that we are seeing.
I don't agree, because all of us around this table can concede factually that the prices of gold on the global market is extremely volatile. I mean, when I was coming, I was just checking, and all of that. The rates were even dropping significantly. At every second, it can drop. Indeed, by tomorrow morning, it could come as very low, all right, in a manner that may disappoint all of us. Now, if the global prices fall, that would be an advantage to the investor. However, now that is at its peak, government wants to make the best of it. So if you look at it, comprehensively, it benefits both parties, i.e. government and then the investor as well. And it is because of the volatility. Look, it could even be possible that the law would come into force tomorrow, and then maybe next week, global gold prices would have fallen very, very sharply in a manner that would be least beneficial. What happens to Ghana under the circumstances? And so government is only judging or making the decision based on the volatility. Indeed, if there were certainty with gold prices globally, I'm not sure maybe we may be contemplating this, but it is extremely volatile. So if it's that volatile, why not? Let's move with the changing sense of life and then make Ghana profits the more.
Yeah, but if you look at if you do the modeling, you see that the impact is heavily felt when the royalty rate is between 8 to 12. So not even 12%, but then 9, 10, 11. Because, royalties are calculated on the revenue and not your operating
total
profits.
revenue, right?
Yeah. So if you do the math, you see that the mining companies get about 68% effective tax rate when the royalty rate is between 8 and 12.
Right.
When it's 12, they get about 60% effective tax rate. So the point is, even though prices might be coming down, the mining companies will still have to pay more because of the way the royalties are calculated on revenue and not on operating expenses. So again, we want to understand from the ministry's point of view, how did they come about the 5 to 12%? Because when we look at the numbers and then we do some independent checks with the 5 to 12, looking at some of the financials from the operating mines, we see that it takes us about from the current 50% we are doing to more than 60%.
Of the effective tax rate,
effective tax rate. So if you are doing about 70% of effective tax rate, wouldn't that kill the sector? Wouldn't that deter investment? So I want to understand, are these numbers from the chamber wrong? Did the ministry do some analysis that shows that even at the current 5 to 12%, the mine should take home enough to recover their profits and continue investing in the country?
I will not jump in the gun. I fear it appears we are, let me put it this way, perhaps we'll be crying more than the bereaved, because prior to now,
the bereaved is crying out loud, right?
But you are amplifying their tears, because really we had extensive conversations with all the relevant stakeholders on this particular implementation. I mean, this particular proposition. Earlier, it would have applied to only lithium. We extended it to, gold and all of that. The reason is this way. Look, there have even been calls for us to completely nationalize our natural resources, our mineral resources, in furtherance of our developmental objectives. If you are a country and you are blessed with mineral resources like gold and all the other valuables, it's supposed to benefit you more than any other party under the circumstances. That really is the thinking of government. So, and then that is not also to say that we are not being sensitive to, the investors, but in our contemplation, putting every other thing together, again, I'm repeating the very thing I had indicated earlier. It is just because of the price volatility. Because, you see, if it were fixated, if the price, right now, the global price is somewhere $5,000, okay? Yeah. All right, if that were going to stay for maybe the next 5 years or even the next 2 years, if there was some kind of certainty, then we could have argued and said, look, now you are not being perhaps very fair. But for something that could, I've forgotten the historical trajectory, but if you look at global gold prices, when it falls like that, it will even take a very long time before it will pick again.
More than 10 years.
Absolutely. Okay, so if you are the country, you are the republic, you have resources, but you're not getting the best out of it, that certainly is problematic. But like I said, there are reforms or policies that would cushion them, incentives that would make their operations less cumbersome, and so all of that would be complementary.
Talking about incentives at the negotiation table, they got to actually reduce the sustainability levy from 3% to about 1%. That's about 2 percentage point drop. But it looks like the chamber isn't really happy with that, because they believe that the real problem has to do with the fact that you're going to implement a sliding scale which is above 8%. For them, above 8%, they believe could hurt them, right? Because they have done their own actuarial study or their own mathematics, and they're saying that if it's above 8%, that is when they feel the impact. That's why at the negotiation table, they said, we can do 4 to 8%. Why has that become so difficult for the ministry to accept?
Yeah, because it comes back to all that I have been saying. Very simple argument. We want the very best and the ultimate, like the maximum benefit for Ghanaians. So that remains the focus.
So what happens if you start implementing and you have more than half of your investors leaving the space?
Why are we forecasting doom? Why are we?
It's an if question.
Yes, I know.
It's an if question.
Absolutely, it's
not about forecasting doom. We are talking about projections. We are talking about financials. Right. We are talking about profitability in operation.
Right.
If a mining company believes that it's no longer profitable to operate in Ghana, trust me, they will not stay because somebody forecasted doom. They will leave. It's the same with the oil space, where there were forecasts about your arbitration and all of royalties and all of that. We sat there for a number of the oil companies to leave, and now we are struggling in that space. The question is, if you start implementing and more than half of your investors now leave, what becomes of our minerals?
It is a valid fear, except that I don't think it will happen, because they have sunk billions into their investments across the length and breadth of the country. That's number one. Then again, we have again said, like I've been saying all throughout, that the rate is applying to a mineral resource whose prices globally is extremely volatile. It means that we can get into a dispensation where they would not feel the effect adversely again. All right. Then number 3,
so
there are incentives.
The only way they will not feel the impact is when gold price must drop significantly.
Absolutely.
To a point where you can get back to 5%, which will mean that at this level it will take a long time to get back to 5% again. Because now we are doing $5,000. We charge 12%. For it to come down to actually 5%, prices must drop by more than $1,000.
Okay, is that not
huge, right?
No, but that's
more than $2,000,
exactly,
right?
But that's a huge possibility. It can happen. I'm saying even by the time we are done with this conversation, it could manifest.
So with the uncertainties going around,
absolutely. So it is not. I'm saying if it were fixated, and look, not to sound dismissive or insensitive to the investors, but if the prices were certain, then every logical and I'm sure very caring person would then think and say that, look, now you are actually biting them too hard because they can't be paying that over a very long period. But this is a mineral resource whose global value can decline at any given point, including the moment of this conversation. And so it's not so much of a rip-off, if I have to put it that way. Then talking about investor flights, the possibility of them jettisoning their investment and then leaving our jurisdiction, I do not see that happening. Again, because of the incentives and the packages that government is going to roll out to them to cushion them for maybe this monetary inconvenience. So I think water will find its level. Everything will be thoroughly settled, and we'll make progress.
I think this might be more operational, but because most of the mining companies, the large-scale mining companies, have stability clauses in their agreement, in their leases. So this new introduction, once it takes effect, the 5 to 12%, will it affect those with stability clauses? And also, would it be after their leases expire and they come for renewal before this takes effect, or then or then it takes effect to all the mining companies, regardless of if they have stability clause or not? Because we've had indication that some companies, because of the stability clauses, they believe that
they're immune, right?
They're immune, right?
So if this affects them, we are seeing possible arbitration within the Ghana mining space.
Possible, how do you call it, judgment debts and all of that, right?
So we want to understand. So the introduction of this 5 to 12%, if some mining companies have these stability clauses, would they be affected? So if not, would it be fair to the other companies who do not have stability clauses because they start paying immediately?
Right. So the stability clauses were birthed because the Republic of Ghana had developmental agreements with some of the companies. I think I have the list here.
I think about 3 or 4 of them.
No, it's actually Newmont Ahafo, Newmont Achim, now Zinjin, Goldfields Takwa, Goldfields Abosu, and then Obuasi. They have that kind of agreement that should give them some...
It's about 4 companies, but maybe different locations, right?
Yes, they have that kind of immunity. But for all others, it would apply. And up until 2028, these immunities would even expire, and then everybody will be rolled on board to the new royalties.
Is that not... That's unfair.
No, I just want some clarity. So those with development agreements, stability clauses,
will not be immediately affected. Yes.
Immediately affected means that when it expires,
absolutely,
it's about 2028, all of them will have to come to the pool.
Yes,
right? So why don't you wait till that period and you roll everybody onto that?
Because, like I said, the global prices of gold is very volatile. So by 2028, we do not know what would happen. None of us would be able to predict and forecast exactly what the rates would be globally in 2028.
How much are you hoping to raise from this new sliding scale?
It depends. I mean, if we peg it at 5,000, it's 5,000 currently, right? Now, 5,000, if you are, you do the math better, you could help me here, right? The last estimation we did, I may have to check and see. We are looking at well about 9.5 million Ghana cedis. I'm not sure this calculation is extremely...
9.5 million Ghana cedis?
No.
That's low.
No, that's low. So it's dollars actually. Oh. Right. But we know
in terms of the royalties.
Yes, in terms of yes. I mean, like I told you when I came at the start of the conversation.
No, I want to get it right.
Right.
9.5 million as an additional revenue or total revenue?
No, as an additional revenue.
9.5?
Yeah, but it is not conclusive.
Then many will say that 9.5 isn't that huge. So why are you sacrificing an entire industry worth over $10 billion just for 9 million Ghana.
Why isn't it huge? It's considerable. I mean, it's okay. It is an additional revenue, all right? So it is only going to add up
about
to
90 million cedis, right?
It's going to add up to what obviously you've been receiving over the period. That is substantial because, I mean, it is now started.
Well, there are those who say that it's simply because government is struggling with revenue mobilization at the moment because we've seen revenue targets actually, we're missing revenue targets by some 30% or so. That's the reason why you're actually forcing your way through this. You cut some taxes just because of political reason, and that has put you in this difficult position. And I asked a very simple question of $9 million US, sacrificing that. Just look at the opportunity cost. Do you think that it's worth chasing?
Let's assume
your estimation.
Let's assume without admitting that it is indeed true and that government is economically, fiscally constrained, reason for which it is going on this tangent. So long as we can do what will help us, provide for the good people of Ghana, balance our books, I think that's enough motivation. I'm not saying that is indeed the case, but assuming without admitting that really we are going on this tangent because there is a shortfall in our numbers, that's not. Okay, problem, if you ask me.
And also, if you look at the production, so currently the small scale sector is producing more than the large scale sector.
Yeah. Absolutely.
For the first time in about the past that we can go
Absolutely,
back.
yeah.
If you look at the numbers in terms of fiscals, the taxes paid, the large scale pays more than the small scale. So in 2024, when you do the royalties or the payment, royalties and taxes from the large scale, they contributed about 90% of the total mining tax to the government. And the small scale did 10%. Meanwhile, the small scale produced about 40% of total gold production in the country. So now the small scale miners, most of them evade taxes, which is unfortunately the truth, because majority of the taxes come from the large scale sector.
So it should be okay, right?
The small scale produces substantial amounts of gold. So shouldn't the government focus more
on the small scale
sector
rather than the large scale?
Currently, they are producing more than the large scale, but their taxes do not contribute or match up with the large scale. Again, Gold Board are paying miners premiums. If you are paying miners premiums and you cannot match up the tax you are getting from the small scale sector, isn't there a sort of mismatch in policy?
No, there's no mismatch in policy. So you will recall, I think somewhere last year, I'm speaking to the small scale sector. So we have realized that a lot of their operations are not harmonized. They are not under any proper regulatory framework. So somewhere last year, an audit was conducted to that effect. I think well over 1,278 small-scale mining licenses were audited. 316 were immediately revoked. The other ones were subsequently revoked, and that process is ongoing. What government wants to do, you see, it's very easy to regulate the large-scale mining companies. Unlike, they are fewer. But for this one, they come in millions. They are huge, so to speak. Okay, so right now, they're thinking, the policy proposition of government is to get them well organized. When you are done with that organization, then you can extend your, tax impositions and every other thing, there properly. Then you reap what you are supposed to reap. But for now that it is disjointed and it is in some kind of disarray, it is not necessarily the focus compared to the large-scale mining companies. For them, it's very easy to access them, getting them, and then putting them in any kind of framework whatsoever. Is rather simple. So it's not as if they are out of the bracket or we are not considering them.
Just at that point, there are those who say that that's a lazy policy because
no, it's not lazy
you are looking at convenience,
no,
right? You're looking at convenience over what you're supposed to do. There are those who say that now you are taxing those who are doing legal mining and leaving the small scale aspect where illegal mining is everywhere dense. There are those who say that this your new sliding scale is a lazy policy. If you really want to do it, bring in the small scale aspect so that there will be burden sharing and what we call, that's trust that, we are paying, those in the small scale aspect are also paying, because there are fears that you may have some of the large scale companies possibly funding small scale mining companies because of the low taxes over there and the fact that that space is not as regulated as you have. So there are those who have the point that what you are implementing may be a lazy policy because you are looking at convenience rather than what is best for the industry.
So it's not a case of...
I just wanted to add to that before
I will lose my train of thought. Caleb, indulge me. It's not a case of convenience over expediency whatsoever. I've already indicated that for this particular bracket, it's largely scattered and it's in some kind of disarray. Indeed, if you look at the mining space, it's always two extremes, small and then large. But if you look at the current minerals and mining policy, we are even bringing in another, the medium, all right? So because you are fixing all of this, you cannot immediately begin to, as it were, make such demands, because that space is not as properly coordinated like the way you have the large-scale mining sector. And so it's just a matter of coordination. When we are done with harmonizing the space, I mean,
I just wanted to add now we have Google Board having aggregators going to each mining or meeting with each small-scale miner. Right. So if you want to identify them, you can identify them. And if you want to make sure that before Google makes payments to the small-scale miners, they are compliance with their taxes before Google makes any payment out. That should be the sort of policy approach we are seeing with the small-scale mining instead of offering premiums. Because unfortunately for me, I don't agree with the premium.
How long has Good Board been in the
Over a year now.
It's less than a year, actually, so to speak. Yeah. All right, so all of these conversations are on the table because the goal is to harmonize, make sure that the entire ecosystem is well coordinated.
Well,
so
there's actually a lot to talk about in terms of this subject, and Parkway Sishando.
Oh, are we done?
Oh, yeah.
Wow.
Well, unfortunately, we are done. There's a lot to talk about, but we'll definitely have him again to actually expand this conversation. But Parkway Sishando, he's the Director of Communication of the Lands Ministry. He joined us on a big analysis on Beyond the Numbers. That's me, Beyond the Numbers with me. I did this with Winston Taki, who is backstage directing, and Caleb Ziblim, and Parkway Sishando was our special guest. Charlie, thank you so much for joining us. Yeah. So see you on Wednesday. Bye.